discussion is about navigating current challenges in banking in customer experience. So my first question would be, these days we are talking about, first fintechs will come and wipe us the banks off. It didn't happen. Then they said, I don't know, cryptos will disturb everything. Nothing happened. Customer will leave us because we don't change. Well, they are still with us. Banks are earning quite a nice money. So how much do we need to really change? I mean, Marcus. Yeah.
Well, probably a wrong person to ask. I mean,
Okay.
you saw maybe, okay, you didn't see so much our transformation journey, but we are like full speed going ahead of it. I still consider it like a fundamental, let's say, life-threatening situation for most of the banks, and not because there is like some immediate competitor, but there is going to come something at some point which will require you to be flexible. And if you are not flexible, if you are not going to be able to move along with whatever the market is asking you to do, it will be rather the kind of like the death by 1,000 paper cuts kind of thing that you gradually bleed out. I mean, no bank is going to die tomorrow. Maybe some in the United States which have put too much money in the commercial real estate, but otherwise, it's rather the kind of like the long-term competitive advantage when you have a good modern setup that is enabling you to go after the next customers.
I think I have this one. So I think on top of what you're saying is that right now consumers, and especially a new generation of consumers, are heightening their expectations in terms of the services that need to be provided. So they expect something completely different. They expect you to know they get inspired by the likes of other apps, not just in banking, but the entire customer experience, what they expect, and the kind of insight they expect us to have about them and to proactively provide those services is completely different. It's changing. So it may be a bank, a neobank, or a fintech, or maybe other players that, if anyone can provide this in a agentic type of model, then those will be extremely successful.
I wrote this. I'm constantly reading your presentations on the LinkedIn. So
for me, I will slightly differentiate versus what you said, and I think the biggest danger for the banks as we speak is complacency, that they are okay, plus the fact that they might be losing the customer relationship. And you mentioned that banks have not gone out of business, but for example, you see consumers increasingly taking financial services decisions outside of the traditional context. So that it can be the case that banks at some point are sitting somewhere in the value chain, but not necessarily on the front. And I think that's probably one of the biggest dangers. And I will give you an example. Look at Apple Pay. Look at the Apple ecosystem, right? So these guys, so it's a tech company. They have managed to build a huge ecosystem. And if you see how much financial services they are offering, starting from a very core base and slowly and steadily expanding their offering, I think it's amazing what they do. I mean, there was a very recent example in the UK. So what did they do? Open banking. So in the UK, you had Apple allowing integrating the open banking functionality, meaning that I can get access to my accounts through my Apple device, and I can see how many accounts I have, basic functionality. But now everything is sitting on my iPhone, right? And I think the banks there, they were complaining and they were trying to say that there was some kind of regulation that was not kept. But this is what I'm trying to say is that um, this is a threat for the banks. So I think we need to see who is gonna manage to keep the customer relationship, how, what kind of business models they want to play. For example, there is this discussion around embedded finance and how banking as a service can be a model or not for the banks. How do they compete? So I would say that there is a discussion to be had.
Especially, it's not just embedded in the traditional sense of being embedded in the sales flow outside of the banking system. but it's about being embedded in the customer's life. I'll give you an example of what might be some other things that would be really interesting to look at. So apps such as Rewind, they allow you to actually store like your life, all your what you're doing on a day-to-day basis, and then give you summaries and almost work as a personal assistant. If they actually use that type of information for other purposes, these apps are going to become extremely data rich. So it's all about the data that you're gathering, how much you actually know about the customer's day-to-day life, what they really need, and what you do with it. And customers will be expecting you to use that, then to provide something. I think it's these expectations tied to this sort of experience.
Maybe stay a little bit on that topic. You mentioned, yeah, Apple is providing that service where bank is potentially losing the contact with the clients and so on. But is it really so? Because I mean, I still have money in my bank. Not still, but I'm using maybe another app to see what I have in my account, but this account is still on the same place. So are banks really losing something in that relation when some other company is only enabling me to see what I have with them? In one hand, on the other hand, if we are having more accounts in the different banks just because we are finding certain services of other banks more convenient, I guess that many of us, or also in the audience, have the account in one of the neobanks, but you're probably not holding your salaries there, so only for some services. So, Magnus.
I bring an example from completely different industry. I had a interesting work in German electricity market. And out of the German electricity market, around 10-15% of the contracts flowed through the third parties, who were basically like different comparison sites who were helping the customer to find the good contracts. This 10-15% was able to define the pricing and the service model and all kind of like how they are being packaged to the customers for the whole market. So that in the end, every single of those electricity providers on the market, they did not have any real control over the business decisions that were they done on the market. This 10-15% ruled everything. And I believe that from my perspective, it is crucial for the banks to continue remaining, at least in some kind of day-to-day banking territory, as the main interface for the customers. If you give away that interface, then gradually the offers that the customers start to see, the things that you want them to acquire or not to acquire, your message just doesn't get through anymore. So they have to come to your channels in whatever format they are. They have to hear your marketing messages. They have to hear what you want to say. Take that one away, and you suddenly discover that you are just a dumb pipe somewhere. The telco companies have ended up very much in the similar situation. They are just the pipes for somebody else who is providing the content. I, as a bank, do not want to be in the similar dumb pipe situation.
Exactly. But the question is, because if you ask the banks, I don't think that you're going to find one bank that's going to tell you, I don't want to have the customer relationship, right? I mean, everyone will tell you, yes, I want to keep it. The question is, can you do it? Because it's not a matter of will, right? Mm-hmm. It's a matter of capability. And I would argue that and we can discuss, but we are now in a platform economy, right? I mean, people are shopping on marketplaces. I mean, we are still going to have an account. I mean, the account is not going away. I'm still going to get my salary in an account. But the question is, this account is funding all kinds of different wallets and sources, etc. And I think what we see is that slowly the market, especially the younger generation, is moving away from the traditional channels and to the platforms and the marketplace. I mean, people are in China. If you see what's happening, people are buying on TikTok. You have this live shopping, and they see something, and then there is a link next to the 10-second video that you can shop something. So this is the platform economy, and the question is, what is the role that banks can play in this platform economy? And if they decide that they want to play a particular one, are they able to do it or not? I mean, that's for me the.
really think so. Give you an example from 2 weeks ago, and continuing also on your topic about marketplaces. 3 weeks ago, I was in Seattle, and I was just listening to some kids put it simple about what they were trying to do and the MVPs that they were pitching to VCs. If you actually, one question is, are you ready to have bots as consumers and not the consumer himself? So because if I have a personal assistant that can actually, it's not going to be me who's going to go through all the marketplaces actually searching for the best deal. It's going to be my assistant that someone is going to build that is actually going to shop around and actually make recommendations in terms of why don't you move your money from here to there, and someone is going to take over that space. So, and those will be actually in the first place would be agents that are going to be doing this on behalf of the customer and suggesting. Eventually, in the end, he may need to approve because of legal requirements. But so I will turn the question back and say, which features can we build from the banking ecosystem that I can actually do this and provide value to consumers in this perspective? Because this is going to happen, and they are already pitching it.
That's true. Then the other question would be, Marcus, when you mentioned 15% was in energy sector, which changed. Did the chip already sailed? I mean, there is quite a lot of companies which are already providing that, and if 15% was enough to change the market, then I guess we are already there.
German electricity market is a bit weird. It has 700 different companies providing electricity, so it's a very fragmented market, and in that sense, 10 to 15% can already make quite a difference. I mean, exactly what you are describing here, that those agents will pop up. I mean, the question always you can ask that, do you trust the agents enough? What will be the market adoption? But 10, 15, 20 years from now, they will be much more dominant in the overall picture. So what is your opportunity as the kind of the fundamental infrastructure provider as the bank is? What is your opportunity to have any saying in that space? And I would argue that the banks who want to, in the long run, to stay highly relevant, they have to go into the interface platform space by themselves as well in order to have their small pie of or share of the pie still in their hands as well. I mean, I see the companies who are very well operating as just an infra provider somewhere in the back as well, but it's a completely different business. Then you just focus on the optimization of the cost, making everything as cheap as possible in the long run, and just serving only those big agents who are buying the service from you. But do you want to be as a bank in that role? Some do, but I do suspect that many universal banks will not find themselves comfortable at all in that role.
And I have an example. Actually, not sure if this is working. Huh? It's working. Okay. 2 examples. Who knows my bank in China? Okay. So my bank belongs to the Ant Group, right? Who is the parent company of Alipay. And these guys, I mean, now I think it has been a bit different, but these guys have. I mean, if you look at maybe 2020 and a bit before, they were doing probably 70% of the lending, the consumer lending on the market, and they had this. So they were taking data from the marketplace. They have built this very elaborate business model of analyzing maybe online. I think it was 3,000 data points, and then based on this, they had the famous 310 model, meaning that if I'm a corporate, for example, back to our discussion around the SME pain points and the inability of the banks to service the segment because they don't actually know their customers because they are not able to analyze the data. So these guys, they were using the data points to give lending to the businesses. So they were saying that 3 stands for 3 minutes maximum. You have to spend time on making the application. Then I'm gonna take the decision in a second, and the 0 stands for zero intervention. And they were very, very successful. I mean, it's a long story what happened afterwards because the authorities in China, they were kind of clamping down on the super apps and the lending side. And if you tell me that, for example, that's something that can happen only in China, who knows, for example, In Kazakhstan, I think there is a bank called the Kaspi Bank. Who knows this? So, okay, so these guys, I mean, probably you know this better than I do, but I think these guys, they built in 2014 a platform. So 2014 is quite early. I mean, it's 10 years before. And these guys, they were identifying the opportunity. I think they built a platform. So I think now they have a payments business, they have a marketplace business, and they're facilitating all kinds of interactions through them.
I can add a little bit about Kaspi because I was born in Kazakhstan and they have the absolute monopoly of the market. Every single person in Kazakhstan who has a bank account in Kaspi. It's really great case. I will try to bring them
Christina,
as
what can you do
speakers,
with
next
Kaspi?
time.
Can you tell us?
You can do everything.
everything.
You can sign contracts in Kaspi app. You can do whatever operations you need with the governmental paperwork. You can sell and buy property using Kaspi smart contract, and you can simply do everything there. And even when they had a really nice case during the COVID pandemic, as you know, in Europe here we had some kind of a green pass. So Kaspi also did it on their platform. So like that, you could just basically have your ID there. Also bank ID in Czech Republic, they have it in Kaspi. So this is a really great case. So come next time, we'll bring them on board to hear directly.
And by the way, for those that are saying that things are such as this are happening all in China, the argument goes: if something like this can happen in Kazakhstan, it can happen also in our markets.
But can it really? I mean, you mentioned they have the monopoly. Everybody has their account. So is it something which could be applicable?
I think it's a monopoly because of the added value. It's not a
Yes,
monopoly
it's
because
not a
somebody
monopoly in
imposed and told these guys that you have to have the account. I think, Christina, what it means is that if you look at the story, and we can, next time we can have a case study around these guys. Starting 2014, they started building up incrementally the services and adding functionality and the taxes and the governments and and whatever. And that's why people are using them. It's not that they don't have an option.
Just curious in a way, getting everybody's opinion. Will the super apps have the opportunity in Europe or not? Because I somehow do feel that European customers feel a little bit more suspicious towards the super apps than many other markets do. So
I have a strong opinion, but I don't want to monopolize the discussion.
I think there is. I think if it's up to consumer, if it provides value, they will take it. I think it's if it provides simplicity, no complexity, it's the consumer will go after something that, as long as we provide trust, again, all the fundamentals that are underpin the transaction. I think it will happen unless probably the regulator is going to be not too keen on that.
But I think the definition of a super app as it's working in China or in Asia, it's never going to be the same like in Europe. Never. Because I don't know who has experience from the Chinese market, but in China, basically, if you don't have Alipay or WeChat, you cannot do anything. And there are many, many people who are actually getting access to the internet and to the services. So these are the gateways for them to get access to the services. And this is not the case in Europe. So in Europe, when we say a super app, it's probably going to happen. We have some. I mean, Revolut is probably the best example of a super app with so many functionalities, but it's very, very different. And I don't think that you're going to ever reach the status in China for many reasons. I mean, we can be discussing for hours, uh, but I don't think it's going to be the same thing as what people mean and doing in China and in other markets. And because of regulation, because of data, because of culture, we are going to be consuming services increasingly from one provider in the sense of, okay, if I'm trusting this provider and I'm doing A, I can maybe do B, C, E, and E. And the SIM example from Revolut recently is a very, very good one. I mean, these guys, they looked at their client base and they said, okay, who is my client base? It's actually people traveling, using FX, etc., etc. So they said, okay, why don't I build a SIM card, which is the number one problem if I go outside of my home country? especially if I change the continent, and they did it. So
In terms of super app, taking this Kazakhstan example and the others, what is the role of the traditional bank? Just to provide an account and kind of like the card, and that's it. At some point, the card will be taken over by the super app providers as well. I become like less and less relevant.
I've been over the past few years. I've been working with multiple industries. There are two industries I'd like just as a comparison to bring up. One is the infrastructure business. So mobility as a whole is also wants to build an ecosystem. So you have the incumbents that are building highways that, in essence, is part of the ecosystem of mobility, and they will say, "Oh, what am I going to do about Uber? How people want to get from A to B, don't they? They don't want a highway. So how do I build an ecosystem around this?" So there will be, they still need to use the physical infrastructure, but the data may start residing in other places. So again, this is examples of this is not only happening in the banking industry, but in many others that are trying to build an ecosystem. And I believe that every time you're trying to build an ecosystem, it's all about the value that you actually bring into your bringing to the people that belong to that network. So, for example, if you are, how do you enable which advantage do you provide to a consumer that is part of your bank's network? Can you have can you be a facilitator of business between your own consumer or your consumers or your finance customers? So if company A and company B are your clients, can you actually help them make more money because they are part of your they are your clients, not just for yourself but among themselves. So can we think about networking effects that can happen in partner for a single bank or in bank partnerships? Is that something that is doable? So how do you bring value by being part of it?
Probably understand the question. Let's stay with the example you took with Uber. Yes, providing value, people want to A to B and whatsoever. Fine. You still need a car. Uber doesn't care about it. You still need roads.
Yes.
So the question is, in using that kind of analogy, where are banks? Are banks those who are able to build a global platform? I'm not sure how many of them really have the global presence. Or are the bank ones which are building local roads?
Who owns
Where
it?
would be?
And who's going to be owning the data at the end of
Yeah.
the day that is actually going to recommend the consumer to do something for taking in terms of course of action?
That's correct. I'm just asking. So where do we expect a bank to operate? Everybody is saying platform is needed and so on, and we are taking, Apple or Uber or anybody as a example of a platform. But those are global players. How many banks are really global in that sense that they could take that position? On the other hand, there is quite a lot of underlying services that still needs to be provided. I mean, good luck to Uber and Netflix and everybody, but unless there is a telecom provider in your country, forget about their service, right? So somebody needs to provide that as well. So are we really sure that banks have to go in direction of being platform provider? Or is it rather that banks should or already are in the position of local or regional infrastructure providers? What do you think about that? And by the way, I mean, discussion is open for all of you, so please jump in and disagree with us.
I don't think that, I mean, banking, how many of you really need, like, as a retail customers, global banking experience? In most, I mean, as long as your card is working everywhere and as long as you have internet access, you don't need any of the global service providers to provide you anything. So, and as long, I think that also the different markets, the local central banks, the regulators prefer to have at least some kind of control over the system. And I don't think that they are willing to give that kind of control over easily to anybody else. So,
which is why they're building the CBDCs, right? The central banks.
yes. So from my perspective, I think that banking in that sense for the normal customers is never going to be so much a global business. The threat is potentially coming from the, let's say, for me, the Apple, for example, is a platform provider. The phone itself is already like a super app in a way that is combining a lot of things together and getting them more integrated. I see the threat coming from there. Apple never wants to be a bank that is regulated in million markets. They just want to hold basically own the attention of the customer, and they also want to get their share into the data, whatever is interesting for them out of this kind of like the transactional information. They want to control those points. And in that sense, the bank would end up, like any of the local banks, would end up rather the local road provider who is getting the job done. But I mean, Apple doesn't care about Czech Republic, Hungary, or anything else. They just want to do their global business. So I would say that the local banks have the opportunity to remain relevant for the local people as long as they are doing good job in meeting their customers' financial needs. If they stop doing that, they start like hemorrhaging the data and everything else towards the other players. And that's for me the moment when the bank and its interaction with customers starts to die.
True, and on the other hand, Apple, to do what they are doing today, they need a bank. So in the US, they're working with Goldman Sachs, and there is a huge story. I don't know who knows the saga around behind the Goldman Sachs story in the US with Apple that they are now, exactly. You know what is the reason why we don't have all this functionality that Apple is offering in Europe that they have in the US? Because Goldman Sachs could not support this in Europe. Very, very simply, right? They wanted a global partner, and that's why they chose Goldman Sachs and not, 10 or 20 local banks in all kinds of parts of the world. And now they're looking for a new partner, but they were basically doing not the plumbing, but it's a very typical example of how a tech player is defining everything because they are the ones that are having access to the customer and they are the ones defining the branding. They are the ones defining the pricing, and they are dictating to even players like Goldman Sachs how they should be doing, for example, the risk management.
Just taking the Apple example here,
Mhm.
all of those banks offer Apple Pay. Who gets the profit out of that relationship? Apple or the local bank?
If you see the margin on the issuing side, I would argue that the local issuers that are offering Apple Pay, they have a tiny, tiny margin because most of it goes to Apple. And you know why?
I haven't checked in the last year, but
Yes,
as much as I remember, we were doing loss out of that. I mean, directly from the
you're
business.
saying, okay,
This is just a kind of like the necessity
Okay.
on the market to have that solution. Otherwise, you're not competitive anymore.
Exactly.
That's
What
the
is the
point.
reason? So the consumer, all of us, they are saying, I need Apple Pay. So you don't have an option. You cannot afford not to offer it,
have it,
not to have it.
Yes.
And that's why I'm saying they are defining the market,
Yes.
not only for you, but also for the partner.
But
Yes.
who can? Yes, please.
Maybe just jump into that because this reminds me very much about the discussions right? Because it was very much Apple Pay, Google Pay coming in, so everybody was getting scared. What are we doing now? Switzerland is a small and complex market, but still pulling together the banks, Postbank as well. We managed to create an ecosystem, a platform, which is mobile payments, which is very specific to the Swiss needs, integrating Swiss POS, and is integrating local players, local ID, and all of that, which Apple wouldn't offer, right? And suddenly you can use it with Apple and with Google, and I think it's a good example and a case to study where things can happen. But what I'd really like to also think about, you're focusing a lot on payments, and that's like the fast money rail, which is often going into those new digital platform providers. But there's also like the slow money, the big money decisions, investments, mortgages, things that you need trusted. So I think banks have an opportunity to also become a platform in very different angles, right? In how you plan your life, all your wealth, not just money wealth, but also different types of wealth, a trading and corporate banking, a company partner, becoming a platform integrating account management and other services that you need as a small and medium-sized enterprise. So I think we need to get away from just thinking about retail and consumer. I don't know if you agree. Question back.
Yes, just one thing. What was done in Switzerland was not done by one bank. Was done by all the banks, and that's the issue. You don't find many markets that all the banks they come together and they say, now we are building something that is going to be addressing the issues of the market. I mean, in Switzerland it was done, in Poland it was done with Blick, in some other markets, but I know many markets that the banks they cannot come together and agree on something. And
Yeah,
I don't know if you agree, but that's the reason of the success of Quint.
so at the end, you're building network effects. Banks are coming together to create scale, to create features where there's a network effect, and with an additional local offering. This is exactly what I was talking about. It could be account management, it could be many other things, from trade relationships. So there are other ways to create value that are just probably the biggest facilitators of business in any country. Why aren't banks? Could a bank be that? If I'm part of the banking ecosystem, I can actually sell more than if I'm not. And this all goes down to lowering costs because there's accounting, all these things from a company's perspective.
Well, if I'm looking at the Nordic examples, then, for example, Norway and Sweden are also very good in the peer-to-peer payment business and everything else. It's just, I think that banks need to feel the existential threat coming from somewhere. And that's why I'm bringing this Apple Pay example. This is just a place where we suddenly lost a lot of money, and we are never ever going to get it back unless we create some kind of competing mechanism. And I'm not believing that there will be many of those opportunities to be given anymore. So, coming back to the original question that what we as a banks are afraid about the overall user experience, then this is exactly the one after another, those kind of touch points shift away, and none of them touch points shifting away from traditional banks to some other third party, whoever this third party is, none of them kills us. But if you add 10 or 15 or 20 of those small touch points moving from us to somebody else on top of each other, then you suddenly discover that you have lost half of the business and you have lost 80% of your attention ability towards the customer. And that's what I'm mostly concerned about. And that's why we're trying to modernize in order to somehow stay relevant. Because one thing that the local banks still have good, I mean, you are still having your nice brick and mortar buildings and the local presence that none of the tech companies or any other third party provider coming from other market can easily replicate. And in the financial matters, especially in more conservative countries, it still matters. And that one is the main thing that banks should play with, that you are still there, you are in touch with the customer, if there is a problem, for example, when the Ukrainian war started, Sberbank closed its shops in Europe, that you are still there. You are not going bankrupt. You can be somehow trusted. Doesn't matter if the trust is actually real or not, but this thing still attracts your customers your way. So from my perspective, it's crucial that we provide, the Swiss example, start cooperating between the banks, start creating some kind of competitive solution that is getting a market standard and harder for the other players to come in. But that kind of wisdom that we actually do together, I see it very, very little in any market. So I'm not that optimistic on that respect.
Then we are actually coming to the point where the question is, where should banks then cooperate together? What kind of services they should say, okay, on this level, I don't know, for the payments, in Austria, I have the example with ATMs or something like that, where we are not competing. I mean, it was part of our business model on the income. It's not anymore. We will join the forces and, let's say, share the tears and loss and whatsoever. But this should provide actually this piece of infrastructure which is kind of holding us together and enabling us to provide a service to the customer. So where do you see that?
First of all, authentication.
Okay.
Never give that one outside of your own country. I
Okay.
very much believe that every country should at least keep that kind of national security in their own hands. Second, I would say peer-to-peer payments, simple mass payments between the customers. It's not a big market money-wise, but it's a lot of data that is flowing around, a lot of understanding what is actually there. When we talk about any kind of credit systems that enable you to understand better what is the credit worthiness of the different market participants, that one definitely as well. So I would put it this way, I would not, and most probably European Commission is not going to agree as well, if you create a common solution on the kind of like the complete end solution. But everything that is basically going into the kind of infrastructural components that define how this market operates. If you define your own rules, if you are able to gather maybe more countries around you, like the Nordic countries have rather done things together, not even alone. In that case, you are able to hold your standard so that it is less threatened by whatever kind of third parties coming in and adopting their standard as the main rule. So that's how I would go after the fundamental infrastructure of the local financial system.
Should it be local or?
Well, local. I mean, I really like the
regional.
I really like the Nordic when they said that we have all of those payment solutions and other things that Norwegian, Swedish, Danish, Finnish market, they just look at it together. I mean, it really makes sense. I don't know what is the logical group, for example, in Central and Eastern Europe that can cooperate like that, but there are opportunities.
We have a lot of different logic.
One of the things that is fundamentally, well, besides risk management, is deeply local and it requires a lot of data and historic data to do it well. So that's always the last defense. But there are also local partnerships. I think someone in one of the presentations mentioned that they had to pivot their company because they were expecting legislation to be approved in 3 years. It didn't take 3 years, so they had to move into partnerships. Some partnerships are fundamentally local, say mail office, other that are not necessarily in banking, but where it can also provide value. Give you an example. What if by paying with a bank, I actually get free delivery? I mean, it's about thinking not necessarily on the banking ecosystem, but also can you bring additional local players that are, I mean, Google or Uber, they will never do that. They're not, well, they never say never, but that's not in their remit. So there are also local partnerships, other ways of adding value on top of financial services that can be sticky and create stickiness. And together with that, bring also additional information that enhance your customer understanding. All this, in my view, is he who actually understands the consumer the best will actually be able to tilt the customer to make decisions that are in his favor. And at the end of the day, that's what big corporates and the big tech is going to do. And if banks have that opportunity, they will be able to influence the outcome.
Opportunities. Any questions from the audience on that? Okay, let's close the discussion with one thing. We can't finish a panel these days without at least mentioning AI, right? So the question would be, I mean, in 1980s, I think everybody says, PCs are coming, they are going to wipe us off. Nothing happened. Then we had 2000, printers, everything, no paper. I think that there are more paper now than any place before that. Fintechs, 2010-ish, they didn't change too much. So now AI is coming and they are going to, leave us without a job. What do you see in the banking industry really relevant for the AI, or the other way around, where the AI truly will bring some advantages? And how can banks, from infrastructure perspective, prepare themselves actually to utilize the power of AI?
Well, in addition to the usual suspects related to the risk and fraud and other parts, I would say that we haven't really touched at all the ability of AI to analyze the customer behavior, go for the individual pricing or giving us the greater ability to serve the customer as this customer is best served. All of that kind of, whatever it is called, segment of one or whatever is the definition, but I believe that in that respect, there is a lot of things that can be moved forward. And they are not going to be I don't think that the customer is even expecting so much AI related features in their mobile banking, but they just want to somehow feel that this bank just understands them somehow better. This kind of like the small elements somewhere behind the scenes that are not branded as AI at all, but they are just branded in a way that we really know you, we understand you, and we are not bothering you in the wrong moments, but when there is a right moment, then we are going to be there for you. And some banks are going to get that one much better than the others. But this is, I mean, I would caution everybody of branding those things as AI features. I think that one is only creating more suspicion among the customers today than trust.
Might be.
Yeah, and this is an interesting one. If you sit in front of a classroom of students, engineering students presenting their ideas, they don't even mention the word AI because it's a given for them. They use it as a tool to build something and to solve a problem, and they don't really go into startup to do that. They go and say, "Oh, we are an AI company," because they're going after the money. But the teams, they're building stuff, but they are not running it AI. It's just solving some problem. So I totally agree with that, and I think it's extremely important. What we need to be mindful of is how that AI was trained, what are the safety and the guardrails that were imposed, how it was built. I think that's extraordinarily important. You were asking about where AI is going to play a role. I think it's going to, in the short term, it's because of customer expectations in terms of how they interact and user experience. I think interacting with text is going to be something that is going to come very quickly. And by the way, most platforms are not yet even ready for that. If you go on X, you still can't I cannot go on X and say, please tell me what my mates are writing on Twitter. Please give it to me. Give me a summary. It's going to come. And people will sort of X will launch this sometime soon, and this kind of, this type of expectations will also come to our apps in terms of interface. Not necessarily, I wouldn't say in the next 6 months or a year. I think the actual building of agents, and once people get more comfortable about how this can be actually built in a safe way, then that is going to provoke a clear revolution. If you actually get your personal finance assistant that's owned by you, and that is actually shopping on your behalf, and this is going to be clearly give a lot more power to the consumers, and it will be important to understand how what a bank can do in that future when it comes, if it comes, what would be how banks would be from an infrastructure perspective be ready to actually interface with actual consumer bots. And what is again your initial question? What's the role of a bank in this? In this? And my answer to that goes back to what is the value that you provide by someone being in your ecosystem, and there's a value exchange to get that data and to be part of that. So beyond the basic functionality.
Your final thoughts?
So I have 3 points to make. So the first one, and I think there is a parallel to banking. I mean, I think in China, in Q1 2024, Apple, I think the iPhone sales, they fell by almost 20%. And you know what is the main reason? So the consumers, they felt that Apple is lagging behind AI functionality, and they are not getting the same functionality like Huawei, for example, in China. So it's not that they care about AI per se, but they care about the added value and the use cases. And I think it's going to be the same in banking. So if something like this can happen to Apple, the banks that are not going to be able to follow not the AI race, but the functionality and the added value coming out of AI are going to have a problem. So that's my point number one. My second point is that, and I think it's McKinsey saying this, which is normally quite reliable. So I think banking is probably, if I'm not mistaken, the number one industry that is going to be affected in terms of revenue. I think, if I recall correctly, they say that on an annual basis, the extra revenue coming out of AI for banks is around 3 to 4% of the revenue, which translates to maybe 200 billion to 340 billion on a yearly basis. And especially on the compliance, on the risk side, and on the operational side, I think Deloitte, they say that the savings are going to be 25%. So for me, it's not an option not to compete on the space. But it's not easy to say, okay, I now want to compete and I want to make, I want to be a player in AI stuff. Because, you have to be in a digital status that is allowing you to take advantage of AI. You have to integrate AI into your current IT systems. You have to retrain your people. You have to adjust your business model. You have to address data and compliance topics. So there is a whole list of things that needs to be done. I'm not saying it's easy, but I'm saying that you'd better start today rather than tomorrow. You don't have to address everything, but to be honest, I would tend to believe that the example I gave around Apple, the numbers coming out of McKinsey, out of Deloitte, I think they have a valid basis, and I think it's the first time in many years that we have something which is not a hype. We're going to have to see how much substance there is to this. But I think for the first time, it's something that we can actually see that brings can make a difference. Versus, for example, the metaverse that was a trend a few years ago, and it proved a bit. There were even companies changing their name to align with metaverse, and it didn't go very well.
Or blockchain, for example.
Yes. So
Buzzword.
that's my take.
Good, gentlemen. I think we could continue this discussion for a few more hours, but we shouldn't, at least now. Thank you very much. Very good insights, very good discussion. Thank you for the audience, for the listening, and I'm leaving to you to close the conference.
Thank you
For today. Thank you.